We want to get your best take on what we're really going to end up with in terms of legislation that goes to the president. Let's start with those state and local tax provisions. Is it your sense that this is a done deal at this point? You have the White House weighing in that basically it's going to be a $10,000 cap, and it can be for either real estate taxes or state income taxes?
Or a combination of the two, yeah. I think that's where we end up.
And how do you pay for that? That's going to cost some money.
Well, the House plan. So if you look at the House plan is paid for. If you look at the Senate plan, they're looking at repealing the individual mandate, and when you do that, that opens up even more revenue. So I think that's how you do it.
You're okay with repealing the individual mandate, although it could destabilize some sectors of the health industry?
Well, if you look, 80% of those who actually pay the penalty or the tax make less than $50,000 a year. So in the grand scheme of things, the individual mandate operates as a tax on low-income Americans. I think that all data shows that.
So you're in favor, Congressman, you're in favor of repealing the individual mandate, no matter what it does to the health insurance market?
The way to stabilize the health insurance marketplace, more than anything else, is to return CSRs. That is one issue that I have taken issue with President Trump. I would like to see CSRs return. There are some other things we can do in terms of creating more flexibility within each state and how they operate the health insurance marketplace. But the individual mandate is not the difference between stabilizing the health insurance marketplace or not. Back to your SALT question, it is very critical. I think you mentioned there's about 70 districts or 70 members who are really looking very closely and making sure that we do have the combination of state and income tax deductions as the ability to deduct that in connection with tax reform. That's extremely critical. And what you then do is you marry that, so to speak, with the lower tax rates, with the higher income thresholds for those tax rates. And I think that the overwhelming majority of hardworking taxpayers and families are going to see a tax cut out of this, along with the projected economic growth on the business side of the plan. So I do believe we're going to get to a place out of the conferee process that's going right now, where most members are going to be able to look at this and say, this is a good plan for our country, this is a good plan for growth.
We had congressmen from New Jersey, Leonard Lance and Josh Gottheimer, yesterday, and they wanted a full inclusion of the SALT deductions, and they had proposals on how to pay for them. Have you taken a look at the proposals, or do you know if those are gaining momentum?
Well, at this point in time, from a momentum perspective, this is entirely within the conferee status, both within the House and the Senate. My objective here is to see a tax plan that is going to facilitate more growth, create more jobs, lift wages, and at the same time provide a tax cut for middle-income families. I believe the plan that comes out of the conference, the conferee process, will do that. The extent to which we're able to make sure that, particularly in the Northeast and I guess in California as well, those who are paying high state and local taxes, property taxes, income taxes, have the ability to deduct and still be able to show that they have a lower tax liability. That's something that I take very seriously. That's something that is very critical to me ultimately supporting a bill, and I do believe that we will have that. Certainly, I have not looked at what Josh and Leonard, I'd have to speak with them a little bit more. I actually expect to do so, but I can't speak with specificity as to what they may have said to you a little earlier today.
And finally, Congressman, I mean, everybody's for paying less taxes, and everybody's for growth. Some people question whether this is a way to get to growth, but everybody's for growth. But what about the deficit? Are you concerned at all about the deficit, either from the tax plan or now we're talking about an infrastructure plan? Are your constituents in Pennsylvania, are they at all worried about how much money we're borrowing and, frankly, arguably putting on the backs of our children and our grandchildren?
Well, certainly, I think everybody should be concerned about deficit spending, which we do and we have done for quite some time now, as well as the debt, which is now $20 trillion. If you look over the last 8 years, I think there's probably, this is my third year serving, but every single year I think they've tacked another $1 trillion onto the debt. This is projected and I would take issue with some of the scoring here, but this is projected at $1.2 trillion over 10 years. So, and that assumes lower economic growth that I think will happen. I believe Larry Kudlow a little earlier, I think it was on your station, was speaking about the fact that if you look at the 242,000 jobs that were created and the 3.3% GDP growth that we had just last quarter, and you look at what companies are looking to do with that capital, you could see some substantial investment in the year to come, which is going to lift wages, which is going to tighten the labor market, which is going to require companies to compete for employees. That natural wage lifting is going to be a net positive. You're going to see more consumer spending. That's the way you go about creating growth in this country. And if you look at the growth projections relative to the tax plan, again, I would take issue with some of what CBO did there. I think they underestimate growth there. And again, you're talking about that's a 10-year projection. So if we wanted to talk about the debt, I would look backward at what sort of the government's spending spree that went on over the past 10 years. If you look forward, I think that I'm very optimistic for the future growth in this country. I really, truly am.